Hey YouTube, what's going on? It's Chris here. I wanted to bring you guys a little update on Bitcoin, kind of show you what I was looking at. So guys, the biggest thing I can tell you right now is don't try to catch falling knives. I've been there, many people have been there. Don't do it, okay? And guys, if you could like, subscribe, all that, it really helps us out. I appreciate it. So when I say don't catch falling knives, I know that we've been oversold, guys, extremely. And the news yesterday about the ETF just being delayed, this had the type of market sell-off as if it was canceled essentially, or they said it's not going through. Like, that's how sharp this sell-off was. So I just want you guys to be careful. And I know that these look like great prices, the 62.51, especially from where we were at. We were at 8,500, and you've seen how many red down days we've had in a row. But with these manipulated markets, you have to be very, very careful. Okay, now if you want to play a short-term bounce with how far we're oversold right now, then that's a different story. If you're trying to get in now and then maybe, sell off, if we can get a move up to 6,500, 6,700, maybe come back up to test this 50 moving average at some point, 6,900 if you wanted to hold it for a little longer. But what we're seeing is increasing bear volume. You see the RSI basically heading straight down. We're at 30 right now, so we're under that critical 40. And we also have all these overhead resistances. We have the 50 moving average overhead, we have the 12 EMA overhead, and we have the 26 EMA overhead. And remember, like I talked to you guys about, remember in these trends, it's like a fish trying to swim upstream. Unless you're going to get this quick little bounce and basically make it to safety for a minute, otherwise you're going to get swept away by the current, and the current is down. And that's where, if you want to make money in this market, people are going to be shorting because they're going to be going with the trend. Anytime we get a bounce up to these moving averages, guys, we're falling back down. Okay, so that's what I want you to be really aware of, is that you can't beat the trend. So I want to show that to you guys. Look at this RSI, and then I also wanted to go to the Bollinger Bands, and you're going to see on the Bollinger Bands how oversold we are. So that's why some guys are playing those quick bounces. You see how we're at the very bottom here, guys, but look at this middle band over top. Look at all these moving averages over top. If you're going to go long, you want to be supported by these moving averages. So that's what I wanted to bring to you guys. Just be really careful on increasing bear volume, news like we had, these manipulated markets. You really don't want essentially to try to fight the trend. So just really keep that in mind, guys. And like for me, my stop loss last night was around that 6,700 or so. When we broke through that, that's where my stop loss was triggered, and I got out holding my money in cash, and I'm going to wait until I see a clear trend change. So I wanted to bring that to you guys, and I also wanted to look at the MACD quick. So we'll get the Bollinger Bands off here, and you're going to see this, how ugly this looks, guys. Do you see that in the histogram just ticking further to the downside? We've had that cross, and remember that cross, guys. You see that when it started to fall down? So essentially when you see that cross right there, we were around $7,500, so you could have got out. And remember, MACD's moving averages, so you're not going to catch the bottom, you're not going to sell the top, but you can get those 80% plays or 70% plays either way, to the upside or to the downside. So that's why it's so important. When you see that cross like that, guys, that's the time to get out, unless you're going to the short side and you're going to short sell it. But guys, I want you to just continue to stay positive and continue to study throughout these times, and realize that we're in a very manipulated market, because it's essentially like the wild, wild west. There's no regulations or anything. So you have all the insider trading, you have pump and dumps, you have all that type of stuff. But remember, a bear market is a bull market in gestation. It will come to an end at some point, guys, whether that be Bitcoin at $1,000, whether it be this price right now, 6,200. It's going to reverse at some point, because you run out of sellers, and then those big guys want to jump on the other side, and that's what they do. They jump back and forth. So in markets like this, they're looking at those moving averages and say, anytime it hits these moving averages, I'm about ready to short the crap out of this thing, and I'm going to shake the retail investors out. Then once they've all sold, I'm going to jump to the other side when the moving averages change and they see that cross, and then they run it back up, and that's what happens. That's what these big whales can do. So essentially you have to just ride their coattails, and you can't let your emotions get too involved. If you say I'm a long-term hodler, then be a long-term hodler and stick to your game plan. Don't even worry about the charts. Don't look at it. Dollar cost average in, whatever you got to do, and say, hey, you know what, I'll be back here in 6 months and we'll see what's going on. Okay, if you want to trade some things, you know, right now you'd most likely want to be on the short side because you have all these overhead resistances and different things like that until it changes. And that's where, guys, when we had almost this little doji here, it looked like we were going to start to move back up, but then we got this news and we just had that all-out dump. And I'm shocked by the all-out dump just in terms of it was a delay. Everyone was expecting it, and I kind of thought that was priced in, but apparently not. It can go even lower, but that's the importance of stop losses, guys. If you're trading, you have to use stop losses. You have to look at that risk to reward, and if that risk to reward's not there, don't go in the trade. That's what I have to tell you. That's what I've learned from my own experience. It's just, it's a crazy market. So, you know, there's going to be huge upsides that are breathtaking, and there's going to be massive downsides which are gut-wrenching. It's just the truth of this market. But really pay attention to these moving averages, because even look at this, guys. Look at the purple moving average here. So this is our 12-day. Do you see anytime we made a run, we hit it, we drop down. We made a run, we hit it, we drop down. Made a run, hit it, we drop down. See that? And then when we made our move, we were up above it. Then we came down here, but we got back up above it, and we were treating it as support until we broke through it. When we broke through it, obviously we dumped down. But keep in mind those moving averages, guys. They're so important, and they're simple, but people don't use them as effectively as they could. Do you see even over here when we had that run up in April? Where's that moving average? It's acting as support. When we're dropping, it's acting as resistance. Right now it's acting as resistance. So why would you try to go super long right now when you have all that overhead resistance? Because even if we do get a bounce, guys, up to that 50, that's a spot where guys will probably jump back in and say, I'm going to short the crap out of this again, and we're going to run it back down. And you know what? We may test the all-time low here around 5,700, where we had this bullish engulfing candle, and it looked like we were going to have an impulse wave 1, 2, you know, potentially 3. We could have had a 4 and then a 5, but we may have had a failure there because of all this news, because we were actually retracing really well. We hit that 618. We were sitting on the 50 moving average. There was a lot of things that were telling us we may make a run back up, but as you know, it happened. And guys, I wanted to read this little bit for you. It's called Riding the Bear in this book, but I want to just read this little quote here, or this little sentence. It says, bull markets tend to rise slowly over a period of months, while bear markets can fall suddenly and sharply overnight, wiping out investment gains that took months or even years to build. I mean, it's true, guys. The bull climbs the hill and the bears jump out the window, or they ride the elevator right down. Like there's no real warnings a lot of times. Like these tweezer tops, this was a pretty good warning right here. But the bears, you see how they just jump, and the bulls, they have to go through this climbing method, and then the bears jump out the window. So you guys tell me what you're doing. Leave me some messages down there. I'll try to get back to you guys as soon as I can. I've been really busy with work and my son and my wife and everything like that. They're both sleeping right now, just down the hall here. So I gotta be a little more quiet and gotta be short with this because everyone's kind of exhausted right now. But I thank you guys so much for all the prayers. Focus on all the good things in life. You know, there's just so much more out there than money, and that's what I'm here to tell you. You know, kind of protect your investment, but don't let yourself go crazy, because these markets at some point are going to turn around, and it'll be great, and I want to be here with you guys for that. So God bless you all. Take care, and I'll talk to you later.